place this trade. We sell the 42 puts, we buy the 41 puts. Stock goes all the way up, close it just before expiration. Close just before expiration. Stock goes up only a little bit, you're still profitable, and now starts to move sideways. Keep a close eye on it, and think about closing it out anytime soon. If you can get at least half of what you went into it for, it's worth closing it out if your stock's no longer moving up. Because if it's not moving up, you really have no idea what's next. It stopped. Why did it stop? I don't know. Not that good. All I can do is see, hey, it did stop. I can see that part. Doesn't matter how bright I am, that stopped moving higher. It's not going down yet, so I don't really want to close it. It's not going up yet, so I don't want to add more. So you think, I'm just going to wait. The more you wait, the less choices you have. The more you wait, the less choices you have. And you get about half of your profit. You sold it for 35. You close out the whole thing now for 12 cents. It's worth it. You don't get 40%. You make 20% on your money, and you did it in 2.5 weeks. That's still okay? Move on to the next trade that actually has a definable trend that you can actually see at that moment in time. Just make it some movements. So close it. So if it goes up, close it just before expiration. If it goes sideways, close it when you have at least half of your initial profit. It's moving sideways. Now, if you don't understand this before you place a trade, you shouldn't place the trade because you don't know what you're going to do. You should have all these things written down on a piece of paper. Now, if you get into this trade now, and this trade just that was if it goes up, you get into this trade, it's at 44.3, it just kind of moves sideways, just moving sideways, not doing anything, it's not pulling back or going up. What do you do now? Remember, you sold time. All you did was you sold 6 weeks of time. Each day that passes, supposedly a little bit of time goes away if it's in the market maker's best interest. It will definitely go away at the close on expiration date. It doesn't have to go away until that day. So if it starts to go sideways and you're just melting some time away, close out the trade. Because you bought it thinking it was going to do something, yes? It didn't do what you thought. So you were correct, but the market makers and the markets just aren't allowing you to be correct. So what do you do if you're just moving sideways? When you have enough of a profit, you close it out, cover all your commissions, you close it out, and just move sideways. Don't get greedy. You're not in this to get greedy. You're in this to make consistent profits, not lose money. Because the longer it sits there, and all of a sudden, 3 days before expiration, and boom, it starts to drop. And drops down to 44, 43, 42, drops all the way to 41.5. Now you're losing money. But the $41 put's not worth anything that you bought. Now you got 1 day left. What are your choices? A rollout. You got kind of squat, right? You got greedy, you waited, thought I'm going to make this happen, and it just didn't work out for you. So moving sideways so you can make a little bit of profit, cover your commissions, close out the trade. It's better to close out the trade, have all of your money and a little bit extra, and get into a brand new trade where it's got a new definable trend for you. Now, it's going down. Let's move down. So we're covering all 3 directions here. It's going up, covered it, moving sideways, you covered it, and it's starting to drop, we're going to cover it. So it pulls back from 44.38 to 43 to 42. Stops about 42. Are you okay so far? Mm-hmm. Okay. And it just kind of consolidates there for 3 or 4 days. Remember, you got September. It's in an uptrend, so you expect it to pull back a little bit. There's nothing wrong with it pulling back. Don't worry about the pullback. It then goes through 42 and goes to 41.5. First thing is I will look at if it breaks 42. Remember, that was our support level, about 42.50. It goes to about 41.5. The first thing I'm going to do is I'm going to look at the bottom. Because it pulled back to 41.5 and didn't do so on heavy institutional selling, that's just the market wafting around. Just the market wafting around. You got somebody that goes to work every day and you're the boss and they come to work every day and they're always on time, and one day they show up 5 minutes late, are you going to fire them? No. But what if they always show up 5 minutes late? You have a lot more to prove. Hey, the reason I'm going to fire you is because you're consistently bad. If your stock is going down, pulls back to 42 and it drops beneath $42, just a little bit, no volume spike, that's not consistently bad. That's just a little bit of selling going on. That just meant that there were a lack of buyers that day. Didn't mean it was heavy selling. It just meant there was a lack of buyers that day. That's lack of volume. I'll let it go. I won't do anything. Next day it pulls back another 10 cents. No volume. I'm going to do anything. Next day another 10 cents. It's irritating. Yeah, that's irritating. But I'm not doing anything. I still got 5 weeks left. So what's my trend? Uptrend. The markets aren't perfect. They're going to move around. Right? That's why you can't say it's exactly this area here. It's just an area. That's why that mat, when the big wrestlers jump off, it gives a little bit because it's just an area. Pulls back to 41. Man, it's getting irritating. I hate that it happens. It's going to happen. But you got to let it play out. You say, well, yeah, but the longer I wait, the more it could drop. Yes, but there's no heavy selling yet. So all that happens now is when the overall market starts to bounce, and the stock has any good news, you're going to see a volume spike, and that stock's going to tick back up to 42 immediately. I'll let it play out a little bit. Now, if it's pulling back and no volume, I'm letting it go. And I'll tell you why here in just a minute, because there's other options we're going to have. Pulls back to 42 and then breaks 42 on a heavy volume spike, which means there was lots of institutional selling. Why would the institution sell in a hurry? How many institutions are there in the stock market? What's an institution, by the way? Where all the brokers go when they get crazy? What's an institution?
Pension funds.
Pension funds, hedge funds, mutual funds, insurance companies, big banks, big brokerage firms, large people who control lots of cash. Not us. We're retail. Large cash. So I'm a mutual fund, and I have about $6.8 billion that I work with. How many shares? Well, when I want to buy a stock, I go and buy 1,000 shares. Is that what you do if you have $6.8 billion to work with? How many shares are you going to buy? Maybe 1 million shares, maybe 2 million shares. Well, how many institutions are there in the stock market? I don't know since the markets have crashed recently, but the last number I saw was over 17,000. Or 17,000. Wow. So when they want to sell, if I'm one of those institutions and I sell heavy one day because I've got 1 million shares of the stock, I know what's going to happen, that if I sell a lot of shares of stock in one day, that's going to push the price of stock down where? Now, I know that that's going to push the stock down. So if I still have a lot more shares to sell, I know that if I sell heavy, it's going to go one day from 44 to 41 overnight. Obviously, I can't sell everything I own, because if I go up and say, I want to sell everything I own right now, what's the market making to the price of the stock? And everybody else around me is saying, why is this guy selling so heavy? Maybe there's something up I don't know. What do you think they're going to start to do? Sell. And a big snowball panic effect happens. Everybody starts selling. Well, why would you sell in a hurry versus I'll sell a little bit every single day? Because if I don't sell in a hurry, everybody else will. And if I just try to sell a little bit every day, the price is dropping so fast because everybody else is selling in a hurry. By the time I finally get rid of all mine, it's really dropped. The only time I will sell in a hurry is if I think that it's going to drop so far that I'm not going to get any kind of price out of it. If you wanted to buy a stock, why would you try to buy as much as you could all at one time? Because you don't want to miss out. Correct? Otherwise, you just buy a little bit here, wait for a little pullback, buy some more, let it go up, wait for a little pullback, buy some more. Let it go up, wait for a little pullback, buy some more. If you want to buy, that's how you dollar cost average on the upside. Same thing if I was going to sell. If I was going to sell, I know when I sell it drops. So I stop selling. Where's it go? Now I can sell some more. So I sold here, and I push it down. I'm stopping selling. Now that I stop selling, where's it going? I'm going to sell it here, which causes it to go where?
Back down.
So I sold here and here. I stop selling. It goes where? Now that it bounced, I sell some more. I sell here. So I've sold some here, some here, some here, some here, some here. It's called a VWAP, value weighted average price. And my average price, by the time I started selling and stopped selling, my average price was here. So if I'm not in a hurry, I'll do a little bit of time because I get better fills. But if I'm in a big hurry, I know I'm not going to get very good fills because the market maker, everybody's selling, the market maker gets to set the price. They set the price based on buy and sell. If everybody's selling, the price goes where? So if it's really bad news and it's selling, I'm going to sell in a hurry because the news is so bad, I think it's going to drop even more by the time I try to sell some more. The only time I want to sell in a hurry is if I think the news is so bad it's going to keep pushing the stock down. So if you see the stock go through $41, $42 on a volume spike with heavy selling, that's just the first day. It's going to keep on dropping. So that stock breaks 42 and it goes to 41. What's the $41 put worth or $42 put worth right now? We covered what happens if it goes up, slightly up, and sideways. Now, and we covered what happens if it just barely pulls back a little bit. We're hanging on to it. We'll come back to that in just a moment. If it breaks 42 on a volume spike, I'm going to buy to close the 42 put and leave open the $41 put. If the stock's at 42, if the stock broke through 42 and went to 41, what's the $42 put worth? You have the right to buy the stock at its current value of 41 and put it to somebody at 42. What's the $42 put have to be worth at least?
$1.
Plus some time. So you buy it back for $1.50. You originally sold at 42. Go back to your piece of paper. Now you buy to close the $42 put for $1.50.